And that came from tricks. I just learned a few basic tricks from people like my grandfather.
What were those
What
tricks?
kind of... Now everybody's leaning in, wanting to know.
Hey friends, we're back with an amazing and informative video of Charlie Munger on the 10 mistakes that every investor makes. In this video, we will find out whether Charlie Munger's forecast came true. Here are some mind-blowing comments made by the renowned 98-year-old investor addressing the dismal state of affairs and the impending potential hazards this year. Number 1. Don't understand the market. Charlie Munger's forecast predictions is like, when a group of people get drunk at a party. They're having so much fun that they don't stop thinking about the repercussions getting carried away like this. According to Charlie Munger, who said that while I was a student at Harvard Law, we rarely traded above 1 million shares a day, the amount of money we exchange now is in the billions. The Roaring Twenties led to the Great Depression, which later contributed to the rise of Hitler. According to Charlie Munger, producing money on a scale is what modern governments do when you toss it. Japan, the United States, Europe, and other countries are entering uncharted terrain in terms of size. The Japanese brought back a significant amount of their own debt as well as a significant amount of common stocks. So, the Federal Reserve System is printing an unbelievable amount of money. Even with all the extreme government money printing that has occurred, Japan's civilization is one of the most admirable in the world. Although they've experienced 25 years of stagnation with little improvement in living standards, I don't believe that this is the result of their microeconomic policies. Instead, I believe that this stagnation was caused by other factors. Number 2, don't understand the impact of inflation.
The Federal Reserve System, you can't imagine how much money printing Japan has done. They haven't had all that much inflation, and it's still a very admirable civilization.
He mentioned that Japan can spread as much wealth as it has while remaining as civilized, calm and admirable as it has. And so I pray to God that the United States will achieve a similar happy outcome. But I believe that the Japanese are better adapted for statuses than we are. I believe they are a dutiful, civilized bunch of people who just suck it up and cope, while in our country, we have terrible intentions. Running a nation that is not monoethnic, like Japan, is far more difficult. It's much more difficult to operate in a country like the United States, according to a Harvard professor who has written extensively on the subject. Japan is essentially sort of a monoethnic civilization that is proud of its ethnicity, and of course, they can manage issues better than some other people can than the United States with numerous ethnicities and groups, and so forth. According to Munger, the current inflation is different from that which Volcker battled. And governments do not appear to be as willing to endure economic hardship in order to combat inflation as they did when Volcker was in charge and allowed to take whatever steps he saw fit. It was a terrible recession that lasted for a very long time and put us through a lot of pain. Volcker pushed this primary to 20% after the 1970s, and the government was paying 15% on its government bonds. I believe the circumstances that allowed Volcker to do that without interference from the politicians were very unusual. And I believe that in hindsight in 2020, it was a good thing that he did it. However, I do not believe that our current politicians would be as willing to allow a new Volcker to be that aggressive with the economy and to trigger that kind of recession. As a result, I believe the new problems will differ from the old ones. Number 3, not following market updates.
It's almost a mania of speculation that we now have. We have computers with algorithms trading against other computers. We got people that know nothing about stocks being advised by stockbrokers who know even less.
Crash predictions by Munger because of these issues. According to Charlie Munger, we have a serious problem. The Federal Reserve's politicians believe that printing more money is the quickest way to address the immediate effects. However, if this trend continues and we all remember what happened to Germany, there will be long-term repercussions. We all know that if you keep doubling the government, you'll end up with something very different. Therefore, if you don't exercise some self-control, you're likely to put yourself in harm's way. Number 4, don't look for great companies.
What the hell are you thinking about? It's weird. And what's happened, of course, is that we're standing a bit for some combination of basic morality and sturdy common sense.
Charlie Munger once said that the Weimar inflation, which completely wiped out the middle class's savings in Germany, combined with the Great Depression to bring about Hitler. Depression Germany was a very advanced and civilized nation when Hitler took power. So if you let your nation deteriorate too much, what you get is a Hitler. We've proven it. In my entire adult life, I've never hoarded money waiting for better conditions. I've just invested in the best thing I guess I could find. My way of life did not involve foreseeing minute discrepancies between the Russell and the Standard & Poor's index over the short period. To swim as well as I can against the currents, I'm constantly searching for something excellent enough to invest Munger money, Berkshire money, or daily journal money in. Number 5. Sells too often. According to him, if you're going to invest in stocks for a long-term real estate, I'm not trying to anticipate the tides, of course. You have to deal with daylight and night. Does that bother you very much? No. Sometimes it's night and sometimes it's daylight. Sometimes it's a boom, sometimes it's a bust. I just believe in doing as well as you can and keep going as long as possible. There will be times when there's a lot of agony, and there will be times when there's a boom. So I just have to learn to live through them. Miss Kipling said, treat those too imposed. I don't think that's perfect. No. Do I think it's okay? Yes, I think the great lesson from the Mungers is you don't need all this damn diversification. That's plenty of things. You're lucky if you've got 4 good assets, according to finance professors and Chinese stock suit Lulu. A little bit of daily journal stock and a bunch of apartment buildings. Number 6. Too much diversification.
Much of what is taught in modern corporate finance courses is twaddle.
The shareholders who are concerned about the future because it seems complicated and difficult. Charlie said, I want to say to them what my old torch professor said to me. If you have 4 things to buy and ask for 20, you're really asking for an egg in your beer. Very few people have enough brains to get 20 good investments. You'd say, Charlie, tell me what your difficulty is, and I'll try to make it harder for you. He did me a favor in doing so, and by doing the same for you, I'm just returning the favor. You're worried about the correct things. Everyone is concerned about inflation. As for the Republic's future and other matters, devaluing the currency poses a serious threat to citizens' ability to purchase goods and services and save for the future. You could argue that devaluing the currency is how democracies die. And when democracy fails in Latin America, inflation plays a significant role in that failure. Therefore, it poses a serious threat to the region's future. Number 7. Not staying in market long enough.
Frequently says, I'd rather deal with a guy with an IQ of 130 who thinks it's 125 than a guy with an IQ of 180 that thinks it's 200. That second guy will kill you.
In the West, strongmen frequently promise to address the nation's economic problems in exchange for their supporters. Unwavering commitment. He does not just predict the end of the stock market. He also warns of economic collapse and potential political instability. Currency devaluation. Charlie Munger stated, I believe the safe assumption for an investor is that the currency will go to zero over the next 100 years. That is my working theory. Number 8. Don't understand the importance of investing. Wealthy investor Chuck Munger, also known as Charlie, at the annual meeting of the Daily Journal. Warren Buffett's partner at Berkshire Hathaway stated that major market issues were coming to light and the outcomes are horrible to waste. He continued, it's the biggest long-run danger we have possibly aside from nuclear war, and potential harm to the nation because of the awful axis. Serious problems will arise at some point. This is how things have always gone in the past. If you look at the Roman Republic, and even after they went to an empire with an absolute ruler, they inflated the currency steadily for hundreds of years and eventually the whole damn Roman Empire collapsed. Number 9. Investing in the wrong companies.
You take the modern world where people are trying to teach you how to come in and trade actively in stocks. Well, I regard that as roughly equivalent to trying to induce a bunch of young people to start off on heroin.
Charlie stated, I would say that venture capital is flinging money around too quickly and that there is a significant and unpleasant access in venture capital and other types of private equity. We know from other countries' experiences that attempting to print too much money leads to challenging times. Number 10. Jumping on risky trends. Lastly, he said that Bitcoin is undoubtedly a horrible overkill. There has never been anything like what we are doing today. A more serious catastrophe is coming than in the past. This is all I have to say to inform you of Charlie Munger's forecast regarding the impending global economic disaster, albeit it might be some time before it happens. To ensure that you don't miss any new content, please subscribe to our channel.